Hello everybody. So today I want to talk about the MicroStrategy black hole, how they are attracting fiat and how they are turning that fiat into Bitcoin via MicroStrategy. MicroStrategy in many ways acts as the black hole that is the Trojan horse behind which Bitcoin is, well, not hidden in the case of MicroStrategy. Saylor is very outspoken, but you get the concept of a Trojan horse. People buy a stock, but that stock is really Bitcoin in the background. And so that's my simplified model of how it works. I'm going to explain that simplified version of the model. I'm also going to attempt, and this is a first, going to attempt to explain a partial model of how it really works. And we're going to see how this goes. We're going to get to that partial model at the very end of the video, and I'll try to take you through kind of how the financial system works. Before we get started with the simplified model of MicroStrategy as a black hole, let me just say that this video is a follow-up on my Calling the Dollar Bluff video. Calling the Dollar Bluff video, MicroStrategy. That's a follow-up on this video. You can find it on my YouTube channel. I'll put it in the description below. A few prerequisites, I think, to understand this video is, of course, you need to understand the fiat standard and how money is created, how money works, why money and debt are the same thing. Money pie grows because the debt never ever gets reimbursed. If debts always got reimbursed, the money pie wouldn't grow, but that's not what happens with the debt. We have things like bankruptcies that make the debt permanent. We have things like people rolling over the debt across centuries that makes the debt permanent. I go over that in this video, talking about things like a 400-year-old bond, etc. You have to understand why the money pie always grows and can only grow, and there's only one way out. And you have to understand why money tends to stick to hard asset. Money doesn't stick to TV dinners or dollar store items. No, money sticks to the hardest asset class and the hardest of them all. And of course, as people who want to invest in Bitcoin, we make a strong case that Bitcoin is one of the strongest assets that money can stick to. So let me get started with the simplified model. So this is the pie of US dollars around the world. Again, that pie always grows. Remember that M2 money stock is what most people always talk about, but there is a thing called foreign held dollars, these euro dollars, foreign held dollars. We actually don't know the size of them, but that's a very big portion of the number of dollars in circulation, and they make their way back to the US economy. They make their way into the entire financial system, this debt that was created outside of the US financial system by non-US banks. So what happens? The debt pie always grows, and the new money, and I estimate that the stock of money increases by 15% a year. That new money sticks to various things. For the sake of this simplified model, we're only going to focus on, not the goods, not the CPI, right? That new money sticks on butter and milk and steak. It sticks on that too. We're not going to focus on the price of groceries. This is not a CPI video. We're going to focus on the share of that new money that sticks to equities and bonds as far as this simplified model goes, and a little bit of Bitcoin. So prior to MicroStrategy, only really people in the know would go ahead and they would just buy straight Bitcoin from that increase in new supply, from that increase in money. But now we have MicroStrategy. MicroStrategy will be buying Bitcoin forever. I quote Michael Saylor, you can be certain of one thing, is that I'll be buying Bitcoin. So how does MicroStrategy act as call it a modern day Trojan horse, where Bitcoin is not really hidden, but a Trojan horse to traditional finance? How does it act as that? Well, that's because MicroStrategy is a stock, and it's a stock that is understood by the market. It's a software company. It's a stock that has made its way to index fund, and it's a stock that is well understood by bond investors. So both equity buyers, stock buyers, and bond buyers see in their traditional legacy finance system, they see MicroStrategy as a legitimate option that is available to them right now. Bitcoin is not the case. Bitcoin cannot be custodied at a bank or anything like that, at least at the time of recording of this video. So what happens? You have the new money growth and the new money supply, and it sticks to equities and bonds. Equities are the third biggest asset class. Bonds are the second biggest asset class, right behind real estate. So they're going to get their fair share of new money supply. That's why equities go up. That's why the pie of bonds increases. So that new money supply is going to make its way to equities and to bonds. And a share of those equities are going to buy MicroStrategy, because MicroStrategy is something like the 270th largest company out of all of the companies that are trading right now in the world. And so total stock market index funds, hedge funds, retirement funds, even sovereign funds from various states, they look at a pie of stocks, and MicroStrategy is part of that pie. And the bigger MicroStrategy gets, the more it's going to get a market-weighted share that is large, that is very large. And of course, when you buy an index, you buy the market cap weighted index. So it creates a virtuous cycle, a self-fulfilling prophecy, where if MicroStrategy is ever 1% of all of the stocks out there, and somebody wants to buy the pie of equities, well, they will end up buying 1% of MicroStrategy. So new dollars stick to equities, and a share of those equities stick to MicroStrategy via way of traditional investing process and traditional pie buying culture, right? The vanguard of the world, the index funds of the world. That money also sticks to bonds, and because that new money sticks to bonds, a little bit of these bonds make their way to the MicroStrategy debt. And of course, the convertible debt is the most common debt that MicroStrategy has issued so far. But in the last call, we know that MicroStrategy is also looking at issuing regular debt. And so when you lend money to MicroStrategy via way of buying their bond, they invest that bond into Bitcoin. When they invest that bond into Bitcoin, the price of MicroStrategy goes up, which means that more people want to buy MicroStrategy as far as their equity index fund and their equity pie of investing, and more bond funds and bond buyers also want to access to the MicroStrategy bonds, because out of the bond pool, they are becoming some of the most interesting, some of the highest performing bonds. And just like many people want to own Apple stock bonds, many people want to also own the bonds of the 270th largest company in the world. The more success a company has, the more its bonds are in demand. The more success a company has, the more its equities are high up in the index funds. And this is the simplified model of how MicroStrategy is being purchased. And as a result of that, Bitcoin's being purchased. When Bitcoin's purchased, Bitcoin goes up. When Bitcoin goes up, MicroStrategy goes up. When MicroStrategy goes up, it goes up as a top equity for people to buy, and it goes up as a top debt instrument for people to invest in. And that is the simplified view of MicroStrategy. Now, let us talk about the partial model. I'm going to call it the partial model because maybe someday, one day, I'll develop a full model. But this is a partial model, and you can see how this is a little more complicated. Now, let's talk about just one tiny thing that I haven't talked about, which is equities themselves. So equities themselves, first of all, they also could buy the debt of MicroStrategy. So Microsoft could be interested in buying a convertible bond from MicroStrategy. It's fine for established companies to buy the bonds of other companies. So these equities, first of all, they could buy some of the debt of MicroStrategy, moving back to my partial model. So that's a new form of demand for that debt coming from the equities themselves. Now let's look at my chart and how my chart got a little more complicated. Notice how I added real estate in there. Real estate is still the biggest asset class. Those new dollars are going to stick also to real estate. And you can read Real Estate in Bitcoin, and there's a relationship, and Saylor himself has addressed it, and you could create instruments based on real estate as a collateral to acquire Bitcoin. But really, for the sake of this video, I'm going to tell you the impact on real estate with a banking system. So what happens when you have real estate and the value of your real estate goes up, right? The classic buy, borrow, die example of California. You buy a $500,000 house in California, it goes to $1 million. What do? You go see the bank. The bank appraises the house at $1 million. It had it appraised at $500,000. When you go see the bank, the appraiser comes and says, oh yeah, it's $1 million house. You have $500,000 in equity extra. Would you want to do a HELOC? What happens in that case is that if you say, yes, I want to do a HELOC, let me borrow $300,000 on top of my already borrowed $500,000 from when I bought the house. Let me not double down, but let me increase my debt by 50% via the HELOC. What does the commercial banking system do, right? It sends the money back to the owner of the real estate, and they can fund their living expenses, or they can buy Bitcoin, or they can buy stocks, or they can buy equities, and then it also creates debt. So it grows the money stock. Real estate serves as a collateral, and when that collateral goes up in value, the banking system lends against that collateral and creates new money stock in the case of the value of the dollar, a vicious cycle. In the case of pumping up assets and increasing the value of assets, it's a virtuous cycle. And of course, the commercial banking system, you can lend against equities, you can lend against bonds, you can lend against MicroStrategy, and eventually at some point you will be able to lend against Bitcoin. So this is where the MicroStrategy situation comes in, the relationship between MicroStrategy, Bitcoin, and commercial banks. MicroStrategy's done this before with one of their Silvergate loans. What do? You take your Bitcoin, you use it as a collateral with the traditional banking system, and the traditional banking system gets back to MicroStrategy and lends against the Bitcoin. So the Bitcoin becomes encumbered. It was unencumbered. Right now, all of the Bitcoin of MicroStrategy is unencumbered. So you pledge the Bitcoin to the lender, and then the lender gives you the money that you can use to buy more Bitcoin. So it's pretty much going on margin on your Bitcoin, and you can do that. And of course, whenever you do that, the money stock increases further because you probably intend to roll it over and roll it over and roll it over through other means and other ways. So that is one way where the value of the asset increases the money supply itself, because people continue to borrow against their increasing value of their assets. At some point, I'll do a simple video to show you how it works with real estate with a simple buy, borrow, die mentality, which is so popular in tech, so popular in Silicon Valley. But also, that's one of the main ways executives do it. So the commercial banking system amplifies everything by taking the value of these assets and lending against these assets. That's why when you follow Bitcoin, it's always such a big deal if Bitcoin is recognized as a way to issue collateral against it, because you're just growing the pie. The final point that I'm going to introduce in my partial model is the growth of the money pie itself. Of course, it also sticks to speculators, hedge funds, traders, retail investors, insurers, portfolio managers, families, offices, risk takers of all sorts, and short sellers. Some of that capital is quote unquote being used to spike up the returns. People want to increase their returns. That's why you have derivatives like MSTR. For example, you have a lot of you have two main ETFs that play on the options of MicroStrategy. What happens is in an order book, when you have a lot of orders, when you have a lot of interest in the form of options, you are going to influence the price of the underlying asset. All of the volatility activity, I'm going to call it, all of the assets that build on the volatility of MicroStrategy increase the price of the MicroStrategy asset. And if we were to operate in a vacuum, you could say, oh, well, this is a very bad thing because the asset is becoming overvalued. Look at this. There's all of this speculation. MicroStrategy is going to end up like GameStop, right? That's something that you could say. But in the actual way that it works for such a big company like MicroStrategy, when you have derivatives, when you have a bunch of options, when you have a bunch of risk takers and speculators buying the derivatives on your asset, what it does is it increases the value of the asset, thereby increasing the market cap weighting of these assets in those index funds, in that perpetual bid coming from retirees from around the world. In many ways, this is a hack that was introduced from the fact that because of Vanguard today and look at YouTube channels that are 2 orders of magnitude bigger than me, right? What do they praise? They praise investing in index funds, right? That's how you can explain the valuation sky high, in my view. The sky high valuation of a stock like Apple, for example, it can be explained by the fact that it's at the top of the index fund, and so it gets that perpetual bid that doesn't really care about the price. And so what does that do when you have so much volatility, so much interest in the derivatives? That increases the price of MicroStrategy. When the price of MicroStrategy increases, there's 2 things. A, you have more demand for MicroStrategy for the very reason that the share in the index funds is getting increased. All of a sudden, the stock, instead of being 270 biggest stock in the world, maybe it's going to be the number 150 biggest stock in the world. And so if you buy the total world of stocks, then all of a sudden you gotta increase your share of buy of MicroStrategy. That's point number 1. And another thing that it does is that you can dilute. You can take advantage of these volatility spikes in your stock price to dilute. And how do you dilute? You issue more common stock. You issue more common stock and you make more common stock more available. And so in that case, you increase the price of MicroStrategy by getting more cash in and buying more Bitcoin, enacting the virtuous cycle again, because the price of MicroStrategy is both based on how many Bitcoin they have, right? And you increase that Bitcoin by issuing new common stock, but it's and issuing debt, of course, but it's also based on the multiple, that multiple on the book value of the Bitcoin, the multiple on top of that also influences the price of the shares. So one of them is kind of an outside valuation ratio, and another one is an objective valuation ratio. And the goal of MicroStrategy is to play between the differences between that premium, right? So take advantage of when you have a really, really high premium. Let's say if you're trading at 5 times or 10 times asset value, then it may be interesting to issue some common shares if the price of Bitcoin is low that month or that week. Or if you're not going to do it like that, MicroStrategy price is going to increase regardless, because the speculators are increasing the share of MicroStrategy in the indices and more people feel like buying the indices. So this is a self-perpetuating, a self-fulfilling prophecy. More people buy MicroStrategy because MicroStrategy is getting speculated on, and because it is speculated on, it has a larger share in the funds, in the index funds. And on days where that speculation is, kind of low, on days where, let's assume we're in a bear market, then the strategy for MicroStrategy becomes the growth of the stock comes from actually buying more Bitcoin via the issuance of debt, via the cash flow of the business, and and this is something I think they will redo one day, via the encumberment of the Bitcoin against the commercial banking system in order to get a loan to buy more Bitcoin. And so, yeah, it's a mess. The legacy financial system is a mess. But at the end of the day, Bitcoin is permanent capital. And this will be the topic of another video. If Bitcoin becomes permanent capital, I could very well see MicroStrategy become a new form of that, not commercial banking system, but perhaps a Bitcoin-backed banking system, which is not something that is based on fiat, based out of thin air, but is something that is based on Bitcoin. So MicroStrategy could flip the book around and end up being that lender, being that provider of bonds, that provider of financial instruments based on the permanent capital. So there could be a big shift at some point in the flow of capital. Right now, the capital is flowing into MicroStrategy. Once Bitcoin gets so large, think 2045, you could have another situation where MicroStrategy is now managing the capital for clients, customers, etc. So this video was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching and have a wonderful day.